Hi, welcome to Elements in Focus. My name is Aaron Rheaume, the Director of Financial Planning, and I've got Grant Soliven with me today. Afternoon, Grant. How are you, sir?
I'm good, my baby. I'm about to say my baby. Geez, my wife. No, it's I'm good, brother. Winds are blowing. It's 80 miles an hour winds here, so just hanging on for dear life.
Yeah, we got some good old central Indiana weather rolling in at the time of this recording. So we'll see what happens tonight. But let's get back to today's the topic of focus. We're back to elements in focus, specifically working through our five critical elements. So if you're new to watching Elements in Focus, Grant and I or one of our other team members will cover our five critical elements in a weekly video. And you can see those on the screen. It's your life after work, tax planning, the investment playbook, risk management, and legacy planning. Today, we're going to talk about the investment playbook. Grant and I really, or whoever is with me, we don't really get into the weeds of the investment playbook. That's what our market carver does. But there's a heavy focus right now, Grant, on the tech sector. And so we're going to talk about it briefly. And so, Grant, let's turn that over to you and give us a little update about tech sector
Yeah,
focus.
of course. I appreciate you teeing me up for it too, Aaron. And just to reiterate what Aaron has said, I would love to, if anyone has not yet signed up for the Market Carver, just a little more depth on that. Our Chief Investment Officer, Adam Harder, who's a CFA, and one of our other portfolio managers, Andrew Thrasher, who's a CMT, chartered market technician, do a really good job of every week talking about what's going on in the market that past week and what are some things that they're paying attention to as asset managers, as well as what we're doing to protect our families or help our families' money grow. And so it's a very, very high level, but very good discussion on investments. And so when it comes to the investment playbook, one thing that Aaron and I thought about when we were putting this together today was okay, let's talk about what's going on in the overall market and specifically why tech is tied into that. So, and you're going to hear us talk again about diversification, right? And so diversification is absolutely paramount. And what I mean by that is not putting all of your eggs in one basket, is that old adage, or not getting over excited or not getting exuberance in one particular sector, and just kind of relying on that to create, I would say, unfair wealth. And then by unfair wealth, what I mean is getting trapped in this greed perspective, right? You think, oh, I haven't saved enough, or maybe this is going to make me a millionaire, right? That usually never pans out. And right now, we're living in an example of what that looks like. So, for example, for those that are maybe not as present in their portfolios or watching CNBC or the market news as much, it's been a rough couple of weeks. And who's been leading the charge downward has been technology. Now, does that mean that this is a long call for selling tech? I don't think so. What it means is that if you're just over diversified or you're kind of just over concentrated, I'm sorry, not diversified, but over concentrated in a holding like technology, the last couple of weeks have been very painful. And more so than that, it's been very painful because you really kind of wiped away the vast majority of wealth you've accumulated over the last 2.5 years. And so when you're not paying attention to diversification and you're kind of overexposed in a certain area, when things turn ugly, they get ugly fast. And how you can prevent that for yourself and your portfolio is to build in diversification. Look at using international holdings. Look at using value-based holdings. Look at using fixed income if you're in a distribution phase of finance. Build an appropriate portfolio that meets the needs that you have today and in the future so you can hold on to those long term. Because here's what traditionally happens, right? We're told to what? Buy low, sell high. Unfortunately, JP Morgan has a study that all of you can find where they looked at the average rates of return for the individual investor up until 2020. And the average rate of investment return for the individual is only 2.8%, where the market produced close to 7 with dividends reinvested. What does that tell you? Well, it tells you the story I'm about to kind of go through, and that is we don't tend to buy low and sell high. We buy high and we sell low because we're emotional beings. And so, why we're using the tech sector focus today to talk about diversification is because there's a lot of individuals right now who are in a lot of pain who are likely going to sell at the wrong time, or they're too super concentrated in tech because that's where in the past year that people have been talking about in headlines where money was, and they bought at the wrong time. So if you're looking for someone to help you diversify a portfolio that meets your individual needs, right? That you can leave in long term and leave the average return of the usual investor of 2.5% behind, please reach out to us, 800-928-5001. We'd love to walk you through what phase of finance you're in, how that plays into your individual portfolios, so you're not trapped in this exuberance or over concentration in a sector, even if it's performed well over time. It doesn't indicate it's going to perform that same way today. So, Aaron, is there anything you want to add to that? I know I talked more about broad-based diversification. Any wisdoms you want to bring to the table that I have left off?
Yeah, just one quick point. These times where we do see this volatility, if you are overexposed or over diversified, like Grant said, now's a good time to reallocate your portfolio. You might not have as much in capital gains or maybe even some capital losses that you could harvest out of some of those tech positions. So if you have a heavy exposure to tech and you've seen a drop in your portfolio, now is a good time to look at rebalancing it if the capital gain situation is in your favor. So that'd be the only thing that I would add is, when we do see some of these pieces of volatility, you just want to, make sure you can make lemons out of lemonade or lemonade out of lemons, however that saying goes. As Grant said, please reach out to us. Contact us at 800-928-4001. If you have specific questions, you can send them to talktofeg@yourlifeafterwork.com or reach out to us at yourlifeafterwork.com. Schedule your complimentary next steps meeting, and we are happy to help you here at FEG. Have a wonderful day, and thank you for watching.